So this session is about the information you need to enter onto an AR transaction for tax purposes. The information is split between two areas. We've got the header information at the top here, and then we've got the lines. If we go over to the show more, this will actually give us more details in terms of the header, so we can actually see a little bit more what's going on. The first thing that's really important is the business unit. That actually has an impact on which tax is actually going to kick in. The business unit has a country code linked to it, and that country code is a primary driver for the tax. The transaction source and transaction type, these can play an impact on the tax, but unless we've told you specifically, they won't do. So it is possible to actually have a tax rate driven by the transaction type itself. The tax itself is calculated based on either the accounting date or the transaction date, depending on what has been set. So for our particular solution, we tend to normally use the transaction date. However, this can actually be different if you're using a country that requires a tax to be driven from the accounting date, for example. When we come down to the actual addresses, the majority of the tax is determined by the location of the customer. And the tax will always look at the ship to first of all. So the ship to is the primary driver for all of the tax. If the ship to is null, for example, it will then look at the bill to location. What that means is that if the ship to was one country and then the bill to was a different country, it would be the country of the ship to that the tax is actually determined on. So if the bill to was a foreign location that was like a shared service center, but the ship to was a domestic location, then you would actually get a domestic tax. Don't be fooled by the word ship to either. Many of my clients, when they sell services, they say, well, we don't have, we're not selling goods, so therefore we don't have a ship to. Now the ship to is actually the place where the goods are shipped to or where the services are performed. So what that means is use the ship to for service sales as well. Likewise, if you had the bill to with an address that was like a shared service center, then of course you're going to need another address in the ship to be able to drive the correct tax. So we can hide this information here. We can go click on the show less. We can move down to our invoice lines. So here we've got 3 invoice lines. I've pre-entered these. I haven't calculated the tax yet. You'll see up here under the this summary information that we've got lines information, but there is no tax yet. So with these lines, you'll notice that from the previous tutorial on setting up the columns for AR transactions, we can still see only our tax classification and our product type, and that's all we need for the tax. What I'm going to do here, I'm going to go up and click on save, and by clicking on save, it should run the validation in effect and calculate the tax. And as we put no overrides for these lines, each of them have been treated in the same way, and we can see that there is a tax amount to be calculated. And if we click on either the amount button or the pencil icon next to it, it will actually bring up the detailed tax information per line. So you can see here that each of the lines was standard VAT, the total tax amount, which you can change, but do not change it. In AP, we allow you to change the tax amount because we have to match it against the supplier. But of course, we are determining the tax. So if you do change the tax amount here, you could become non-compliant. You can also see the tax point basis. So this is saying this is the invoice date, i.e. which is the transaction date up here. And then you've got the taxable amount, which is your base amount. And of course, this is obviously what's driving the tax amount. So if you want to change the tax, don't do it here by clicking on the tax details and editing it there directly. We'll cover that later. What you want to do is come down to the lines and change the tax classification code field. So scroll over to your tax determinants here, and we're going to leave the first one blank, but if you click on your tax classification, you'll see here there's a list of values. Now, the way the solution has been designed is that we actually use dummy tax codes. So EU sales goods isn't actually a tax rate. The way the system works is by choosing EU sales goods, the system will work out that you're in the UK and therefore you need to charge GB VAT EU sales goods. If, for example, the business unit was linked to Belgium, then it would charge BE VAT, EU sales goods, and likewise. So it's a way of minimizing the values you need to choose. So for some codes like BE VAT 0, which are more country specific, because not every country has a 0 rate, in this situation we can choose this one and it will drive the 0 rate tax. So I'm going to choose a BE VAT 0, and in this one I'm going to choose the exempt tax. So now if I come up here and I click the save, you'll notice that the tax has actually changed. And if we click on this value here, you can actually now see that we've got standard, because we haven't changed it, we've got the GB VAT 0 and the GB VAT exempt. So you can see from here we've got exempt tax, but the actual tax calculated is GB VAT exempt. If the tax you've calculated isn't what you want and the tax classification code hasn't worked for you either, then what you can do is go back to your tax details. And you will see here that if a tax rate can be changed, so in this example we've disabled the 0 rated tax to be changed. But if a tax can be changed, then we can come up to the actual box itself. So we're going to go up to GB VAT standard here. And if you click the drop down, this will give you a list of all the tax rates that are available to choose. So for example, the tax rates usually go back to the year 2000. So we have the 15% and the 17.5% that were the tax rates for the UK in prior years. And we also have the GB VAT exempt. So if I then change the tax rate to GB VAT exempt, you can see the tax amount changes here. And now if I save this and we look at the tax amount up here, nothing changes at this moment. But if I come up here and click on save, you can see the tax has now changed. And by clicking on the tax details, we can see now it's exempt. So what this gives you is the ability to use the tax classification field to override the tax. But for whatever reason, if that does not work, you can still come in here and change the tax rate to the actual rate you need. Now, one of the things to bear in mind is that there's no additional rules behind the tax classification code field. So whatever tax code you actually choose, that is going to be the tax rate you get. So if I choose EU sales services, for example, I click on the save. So by clicking up here on the tax now, you'll see that the second line is actually calculate GB VAT EU sales services. So the fact that the ship to location is not Europe, and therefore we would expect a domestic tax rate like GB VAT standard, the fact that we don't get any additional logic in place means that you've got to be careful. If you choose a particular tax rate, that is what you will end up getting. So you have to make sure that you know what you are doing when it comes to determining the tax. For this example, we're going to put in a customer who is actually in Europe. So if I go to the show more, we can see here at the address that this ship to is actually now in Germany. However, I have purposely left the bill to United Kingdom. So let's hide that there. We've got 3 lines, and as before, we only see the 2 tax columns. This is based on the setups we previously did in a previous tutorial to remove all the other tax columns that are no longer needed. Now, for this particular case, I'm going to actually change the product type. I'm changing the first line to goods, third line to services, and the first line is still left blank. So if I click on save, and then we go to the tax details, you'll see here that we've actually got EU sales services, EU sales goods, and EU sales services again. So the one that was left blank, because we assume that everything we sell is services for this particular setup, is defaulted in as services. The product type that was left sent to goods has changed to goods, and then the third line was set to services. This is also services. Now, to prove the way that the tax works and the fact that tax is always calculated based on the ship to location, if I actually remove the ship to location, so we've changed nothing else, I've just removed the ship to location, I hit save, you should notice that the tax now changes. And the reason for that is the tax logic is looking at the ship to. It can't find a ship to address. It then goes and looks at the bill to location. And as you can see here, the tax calculator or the tax status is GB VAT standard. Ignore the fact that the tax rate name hasn't changed. This is a current bug in Oracle. So make sure you check for the status. And if you can't see the status in the columns, then go up to View, Columns, and Manage Columns. And what you'll have is the status. The status will be a hidden column. So move this one across. It will automatically put it to the bottom of the list, and then bring it to the very top. Click on OK, and then we see the status. So with the tax rate change to standard, we can save and close this, and we can go back here and enter in an EU address again. So with this transaction, what we're going to do, we're actually going to change the tax classification code. So unlike AP, where there's logic to actually determine what the user is entering can actually be used, there's a no holds barred approach with AR. We should be able to fully automate your tax based on who we're selling to, where we're selling from, the type of thing we're selling, etc. So if a user does need to override the tax, we're assuming that they first of all know that what they're doing, 2, they are choosing the correct tax, and 3, they have permission to do so. So here we're going to do some overrides. If we choose exempt from tax, we're going to choose standard, and we're going to choose 0 rated. So I actually then save this particular transaction. You can see here we have got tax calculated, and if I click on it, you'll see that we've got exempt, standard, and 0 rated. Now again, you'll notice that even though we chose exempt tax and standard VAT, it's actually correctly determined GB VAT exempt and GB VAT standard. So what about if I change the ship to location, and the one I've chosen here is actually a US address, so it's outside of Europe. If I click the save, and then I go to the tax itself, you'll see here that it's now actually changed to export of services. So the system doesn't need any tax classification codes. It's based the fact that we're selling primarily services, so that's the default. We're selling outside of Europe, so therefore it's calculating export services. Now the word export is used here to describe an out of scope tax. So whilst the tax is technically out of scope, by calling it export, it makes it very clear to the users and on the reports. So it makes it very clear that this was a sale of a transaction outside of Europe, and therefore out of scope of tax. If I change the product type here to goods, and we now go back to the tax, you'll see here that this is actually changed to export of goods. Technically, there's no reason to split between goods and services for export. However, because we provide a global solution, with some countries, there is a requirement to split between goods and services. And making the split, because it's fully automatic, it has no impact on the end user. They're not having to choose any values. Making that split just means that we can provide more of a global solution, and it just gives a little bit more information for the tax department when they calculate taxes at month end.